o'clock on the 7th. Happy Monday, everybody. Let's go ahead and get started. Let's see who's out there. We'll get into the YouTube channel here in just a moment. Let's begin with a risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the risks. If you're following me out there on social media, make sure it's the real me. Mondays and Fridays for the Pulver Report, youtube.com/Chris Pulver, Facebook, Instagram, Twitter, TikTok, at Real Chris Pulver. All right, let's jump into the charts right here. Take a look at everything. It's going to be a busy week. Couple of major events sticking out if you're not paying attention, but you probably are. The U.S. midterm elections this week. Go to calendar here on Tuesday. That'll be happening all day. And CPI data on Thursday. So we have inflation this week, which will likely be a big mover. And if we go to this week, midterm elections, Tuesday all day. Any big surprises for the U.S. With respect to, is there a gridlock still? Is it a Republican sweep? Is there a Democrat surprise? I don't know. We'll see how the chips fall from Tuesday night into Wednesday morning, what the market thinks. CPI to the U.S. on Thursday morning. All right. So this is going to be interesting. Forecast at 8%, so 0.2% better than the previous print. One thing that I've been talking about in the trading rooms the last couple of weeks, we need to see a couple of things. We need to see the two-year yield peak, and it does seem to be looking better for that. I'm not saying it's in, not saying the top is in, but if we have a peak in the two-year yield and we see the dollar dropping, which it was dropping last week post-Fed, even on Friday, we had a really nice dollar weakness move on Friday. It was a little fake out at the beginning, but every pair was really running nicely against the dollar. And CPI news again, 0.2%. I don't know if that's enough to get the market super excited, because we're not making dramatic, strides to the downside. So, look, inflation, energy especially, food especially, which they continue to exclude in a lot of these inflation measures. 0.2% is not really a dramatic decrease. I think if we have some type of a pleasant surprise, and this again could restoke the inflation discussion all over again because the market could rally and rip really aggressively. If we all of a sudden come in at like 7.7 or 7.5, that would be a pretty dramatic drop here on the U.S. If I do there's an inflation year-over-year chart right here. So we're sitting at 8.2. Right, so if we had this really sharp move to the downside, I'd say 7.5 or lower. I'm trying to think here where these data points are at. So December, I think these are all monthlies actually. Yeah, it's just a monthly print. But man, I don't think this is a mistake, but it looks like we just have a ridiculous amount of pivots. Now again, this has very little to do technically with where the data points. I mean, just because we have pivots to the downside does not mean that, inflation is going to drop. It's like, well, the whole conversation this year has been when is peak inflation? And now the whole conversation is when is the two-year top? So here's the two-year yield. And if we take a look at the daily chart, I said this for the last probably month, as we just continue to break higher. The Fed funds rate was anticipated to be somewhere between 5.25%. Even after last week's Fed meeting, higher for longer, more restrictive. The Fed's tone is not necessarily changing. We didn't break any fresh lows last week. We didn't break any fresh highs last week. But here's the two-year. This is probably the more dramatic top that I've seen in a while. We had a nice little kind of run up, little correction, but this big rejection here, we're at 5.15. So we're right in that wheelhouse of, is that what we needed to see? Was the two-year yield had to kind of price in and hit that point that the Fed was going to be at? And here's the Fed watch tool right here. So not much has changed, right? We go into December's rate decision. We're sitting at another 50 basis points for December, likely another 50 basis points for February, and then March quarter. May, same. So by December, February, March, that's where the quote-unquote pause is sitting. This could change, or we just pause and stay. We just pause and stay. And whatever that rate is, maybe it's 5%, maybe it's 5.25%. If the targets get shifted again, that's not good for equities. Anyway, long story short, 2-year yield a little bit more promising, but chart alarm still set at the high and the low. We certainly haven't broken a trend line. We're not making lower highs and lower lows, so there's still not a top yet. If we go to the S&P 500, we kind of stabilized last week. We had a really aggressive sell-off. This was FOMC on Wednesday. The market kind of, fought back a little bit, but this could certainly be faded going into this week with any type of uncertainty. If the inflation print, the CPI on Thursday prints like 8.2, and all of a sudden inflation's not budging, I would say look out below. Your fair market for the S&P is around 330 to 340. These lows are potentially vulnerable, and I say this as just more of a plan for the best, prepare for the worst, because we can't be ignoring the fact that there's possibly more downside just based on the fundamentals. This week's earnings, by the way, I think I have a screenshot right here. I just took a screenshot of the notables. This is mostly tech. And last time I checked, from around, April, May of 2021 into November 2021 into pretty much all of this year, everything that has been tech has been absolutely crushed. So this will be a really good indication week to see where's tech at with earnings. Because if tech earnings are rough, and this is taking right on the right on the heels of mega cap tech, your Amazons, your Googles, Microsoft, that have all missed expectations, having weaker than expected forward guidance. So if this is a really rough week for earnings, guess what? Earnings compression just puts the pressure on to the downside as well. And I'm not super optimistic about the market trying to fight this year. Now, again, it can, right? I mean, this is our June low right here. So June low, we breached that with that's the CPI data from September, right? That was a reading in October, but the September numbers. So we had our June low, we had our fresh low here, but can the market fight back with this little kitchen sink rally by the end of the year? Sure, it can. But fundamentally, we fight back and then what? More to the downside? Or let's say we don't fight back because it's just the reality is too grim, right? Earnings are too bad. Tech is dead. Tech is toxic. Unless we get a big lift from Asia, which really has nothing to do with U.S. indices. But there you go. And over the weekend, I know that China kind of recommunicated their stance, which is still very strict on COVID lockdowns, right? So again, here we are, another Monday, another weekly outlook, and guess what, everybody? Market can do that. Market can do that. How are you positioned, right? So that's what matters. All right, let me get logged in here to YouTube and say hi to everybody. All right, we are live. What is happening? All right, nice little crowd today. Chris, good morning. Denise, good morning. Bill, good morning. Ruth Ann, good morning. What's happening? David, Brad, Linda, Andrew, Gary, Jason. Nice. Daniel, good morning. Steve, good morning. John, good morning. Gail, good morning. What's happening, Sterling? Thomas, good morning. All right, nice to see everybody. Yes, yes, yes. All right, cool. All right, so let's take a look at the DXY dollar index. We are below the 50 period. We have not taken out the lows yet, but I'm going to watch 109.45. Let me set a chart alarm there. 109.45 on the DXY. 109.45. Fresh lows. Looking to see if the dollar will correct and head into the 200 EMA, hopefully more. Or if we see risk off this week and this is nothing more than a correction, we come back into the trend line support. Dollar heads back up, whether we hit this little resistance area or we head back up to these highs, or we all of a sudden break something. I'm still in the back of my mind prepared for dollar strength to get into these, crazy 2001, 2002 levels where we had a tech crash and essentially we peaked on the dollar strength and then a drop. Read an interesting article theory this weekend called the dollar milkshake theory, which seems to be playing out right now and has been playing out all year since early 2021. Basically, the summary is this. When times are tough and risk averse, the dollar basically gets super strong and sucks up all the liquidity in the global economy. And it's true, because right now, with the strength of the dollar, you're taking countries that are, denominated in U.S. dollars, or their trade is denominated in U.S. dollars, and it just sucks up all their potential purchasing power. And that's awful, right? So the dollar strength ends up crushing and shifting the powers quite a bit, and to the point where, if you're on the brink of collapse and you have, 20, 30, 40, 50% inflation, I'm talking mostly emerging markets. We have a couple out there, Argentina, Turkey, we have Nigeria, and again, these aren't, major economies globally, but at some point there's going to be this domino effect where let's say that there's 20, 30 countries that want to just get away from the dollar. I wonder what that looks like with respect to the, dollar strength and purchasing power. And does that transfer into something that is alternate to the dollar, i.e. crypto, i.e. Bitcoin, something like that. But not yet. So I'm just looking for a correction in the dollar first. I was equating for this year if the 2-year yield is going to peak and we get a bottom rolling out in equities, that the dollar would also get weaker. That's one of the more obvious correlations that we're dealing with right now, right? If we're going to get a risk-on rally for the markets this year, the dollar has to get softer. So since FOMC last week, it's certainly looking that way. But like I said, we're coming right back into some pretty decent technical support right in here. With this trend line, we might still keep this 200 EMA out for longer, so there might be a little rally coming. Again, this is where the dollar gets kind of broken, but I could see a topping pattern setting up for Q1 of next year, just based on technicals. But interesting move on the dollar since last week's FOMC. Oil and Brent crude, big moves to the upside. This again looking like I think we're running higher. I would be watching, energy stocks have already had a pretty good run, but if we break this level here, this does look like a potential head and shoulders. And so we're right back up to that neckline, which is why this is going to be such a big level to hold or break. If we hold and we pull back, okay, fine. We're not there yet. But if we breach, this is right around $94. We breach 94, what is stopping it? Nothing, right? 105, 108, 110. There's a big potential run there on energy stocks. We already have some exposure in equities on demand. A handful of energy plays. We're looking at utilities this week. We'll talk about, today, see if we like some positions. But anyway, potentially unhinged bullishness above 94. If you look at UK oil, that's Brent crude. UK oil, same thing, right? We get above 99. We get above 99. We do have some potential channel resistance right here. Resistance. We may have some channel resistance around 105, but if we breach 10, let's say we break above 99 to $100 and we sniff this 105 area, man, if this breaks, this looks bad, right? I mean, it looks great for oil traders, looks great for long energy, long commodities, but that looks bad for inflation. That looks bad for the whole conversation all over again of strategic petroleum reserves and what we're putting out there to try to suppress energy prices. And this is going to be, potential social programs. I mean, basically, this was the big collapse in the UK so far this year, right? We have concerns there's going to be a 2-year compression. We have energy prices going crazy. The bank is raising rates. So we essentially had a bond rout back in September, right? So, morning, Walt. How are you? Good morning, Gary. So anyway, we got to watch this. Chart alarms are set. Let me set a couple more. So if we breach this high, that's right around 99. Let's just say $100, and we get into open space at 105. There's not really a lot that's going to stop oil if we break these highs. Now all of a sudden we're having a conversation. This is open space. Break bull flags. Maybe this thing stalls at 120. Maybe if we're lucky. 123.70. And back to the crazy peak high back in March, 137. I'll set it at 135. So that's straight up, crisis conversation all over again, if that's what we see. But this would be a good time to be in energy. So 92.05. I mean, in a way, it's like part of me wants to take a potential bear call spread to see if the technicals hold right here. But if I'm wrong, it's going to be a small risk. I suppose if I could collect, maybe if I did like an in the money bear call spread and I hate doing an at the money bull put spread, just where we're at right now, but we'll see. I'll think about that today for class. All right, let's take a look at some currencies. Here's currency strength for the morning. Volatility wise, pretty quiet. Pound, nice little sneaky move to the upside, which I'm not complaining about. The euro on top of the Swiss, which I don't love. So we'll see if we can get the Swiss get a little bit softer. And everything else is kind of stuck. Dollars down here with the CAD, Aussie, New Zealand off the lows a little bit, JPY's at baseline. So not a lot going on there. Currency strength wise, medium, 60 to the downside, 70 to the upside. We'll see if the opening bell gets anything rocking and rolling, or the market's just going to sit and rest and see what the old midterm elections have to bring Tuesday to Wednesday's trading. Okay, take a look at some currencies. If you have any stocks, any cryptos, let me see what Bitcoin's at. Bitcoin trading at 2731. We have not had some follow through yet. This is going to be interesting. Again, dollar weakness. I think we're in some open space technically for Bitcoin to rally, but I don't love how it's behaving. It looks like it's setting up just kind of a mild channel, right? Something like this, where it looks pretty corrective. So perhaps if this structure holds right here, then we might just see some steady movement back up, challenge this high, all the way back up to this level, and this big run, this potential really nice bullish move all the way up towards 30,000 would certainly come with a weaker dollar and a Q4 11th hour rally to save the markets for the holidays. Make everyone feel better about themselves. Like, oh man, Q1, Q2, Q3 was pretty terrible. Q4 was amazing. And so maybe Q4 can make up for some hurt feelings out there, right? With everything just kind of taking it on the chin. But if we don't see a ton of dollar weakness, and we don't see the 2-year peak, and we don't see the stock market go higher, then Bitcoin is probably just going to hang out and go sideways, maybe come back and revisit the lows here around 18,000. But I'm looking for a pretty solid base, right? Pretty solid base here on 18K. Could we get flushed down and go a little bit lower? Yeah, it's possible. But I'm looking to scoop up some Bitcoin down in here. 18K, 15K, 12.5. That's what I have written down. Ethereum, same thing. 1581, pretty strong support at 1,000. Open space. If we just get a little bullish push, then there's open space back up towards 2,000. Okay, I measured some symmetry here at 2307. That's off of this swing. There's a low to high, higher low to higher high. That's 2307. So that'd be a nice little run on Ethereum if we get it. I did some chart alarms going off on some of the other ones, Algo, and Solana. They were up. Litecoin was up. So that's kind of the stock play, crypto play. Currency-wise, Aussie CAD. I'm looking for Aussie CAD to come back. New Zealand CAD, Aussie CAD, I like long on both. Looking to come back into previous highs. Right now, it looks like we can make a nice sort of run back into the 200 EMA. So the sell zone is still intact, but because we scored a point here recently for those bears, I'm looking for the bulls to come back and rebalance, possibly even shift it back up to challenge the high, put in a low. This has been a bit more to the downside. Even here where we've had a high to low, lower high to lower low, we've come very close to finding this nice little demand zone down here around 8,600, and just look for some more consolidation. So we find some lows. Let's say we have consolidation somewhere in here between like 95 and 85. We're looking to buy low, sell high. If we get a reversal pattern, I would still be looking to go long in here, challenge a level, get a pullback, and then trade Aussie CAD long. If we see a lift in China, I think that also gives the Aussie a little bit of a bump to the upside. Of course, we have to watch oil prices and see where the CAD goes as well. So it's commodity versus commodity. Aussie Swiss. Aussie Swiss, if we can break this trend line, I like bullish back up towards 68 or 68.50. Aussie yen, pretty quiet right now, I'd say, at Aussie yen. Aussie New Zealand, I'm going to look to see if we can, this one would hopefully just continue to slide a little bit lower. I like this 108 to 107 area to start looking for some trend line breaks, start to buy this back up. There's some really nice trades back in here towards 110. There's also a nice pivot cluster back around 111 to 112. So the lower I can buy this, the better. Like I said, between 108, 107, looking for some buy opportunities, trend line breaks confirmation, and hopefully a few hundred pips to the upside on that Aussie New Zealand. Aussie dollar, still based on dollar movement. There's room back towards around 68. Look at the sell zone. It's pretty much been in the sell zone for the last 12 plus months. This 200 EMA in the daily time frame seems pretty solid around 67. So could we get a nice break this week with weaker dollar? Maybe. It's possible. A risk on rally, a lift in China, we could see some strength in the Aussie. CAD Swiss, decent pullback, but I'm looking to see if this trend line will hold. If we get a pullback in here and we rally back up to these highs, again, I'm looking for some type of bottoming pattern to get back up to range highs. That's around 77.50 to 7,800. CAD yen, equal highs, possibly a rising wedge. connect the highs right in here, or connect the lows and connect the highs. A lot of choppiness going on. I would sell any fresh highs. Otherwise, look for a break below this level and take it back down towards this daily 200 MA. Exponential moving average down here in red. Swiss yen 147.88, still trading inside this big BOJ intervention candle from back in September. Euro Aussie, I'd leave that one alone. Euro CAD is an interesting play. I don't know. This one, I guess it has to prove it. I guess I'd be long if we break above these levels. I'd be long Euro CAD, but I don't believe that's going to happen. I think if anything, if this trend line breaks, I'm going to be bearish on the Euro CAD, and I like to be bullish on the CAD Swiss. So I would sell below this trend line. Otherwise, I'd wait for a 3,700 break. If we break 37, then I'd look to get long. So it's kind of in a choppy spot right now. Euro Swiss 98.84. Still a lot of chop in the last couple of weeks. Hopefully we start breaching highs, get back above parity, start running towards 103.50 or higher. Euro pound, I'm out of this one. Euro yen, leaving it alone for now. Euro New Zealand, staying out of this one as well. Actually, Euro New Zealand, looking for some sell trades if we have pullbacks. If we have pullbacks here, you're looking for some more selling on the Euro New Zealand. Euro dollar. So a nice little run. Daily bar count is pretty darn high for this red line. That's my 200 exponential moving average at 104. I could see a little bit of a squeeze. Again, this could be a nice little run this week against the dollar. I have some stacked buy stop orders right there if I get them. Otherwise, this could be kind of 50-50 in a toss-up based on the DXY. Pound Aussie, pound Canadian. Ooh, I should have bought that. Nah, I missed my spot. So it didn't quite fill where I wanted. I was looking at this level for a chart alarm and a pocket right back in here around 1.50. Didn't quite get there. So I don't know if I'm going to participate with pound CAD right now. I did take this, flash crash move all the way back up here, closed it out around 57.50, which isn't bad considering the high was like 58.10. So I'm pretty happy with that close now that I see it. I would have been a little upset if it went up to 6,000 like my original target was. But anyway, I think pound CAD has some upside potential. We can look at that in a shorter time frame this week in the flex room. Pound Swiss, still long on pound Swiss. Pound yen, staying out of for right now. Pound New Zealand. Pound New Zealand's already made a pretty good run to the downside. We were looking to basically try to identify some support around 1.90. This certainly is a volatile pair. We might just come right back in to have all this volatility from this low to this high. We had a lot of consolidation in here, so the market might do the same type of thing. It's just kind of settling into maybe a 300 pip range or so. So we'll watch for some structure on the pound New Zealand. Pound US dollar. In the last 48 hours, we have some pretty good candles, promising candles. Let's see if we can break these highs. This 1.1650. So I'll go 1.1655. 1.1655, see if those highs are broken. And I'd love to ride this pound US dollar to new highs. Also, pretty nice bar count around 2100. 1.20 is a round number. That's going to be my profit target. New Zealand CAD, also heading higher. Added some buy trades in this one over the last couple of weeks. Targeting this high, targeting this high. There's some really good past resistance around, past support becoming resistance right around 83.30 to 83.40. So I like that New Zealand CAD long. New Zealand Swiss, we're still riding this one long as well. New Zealand Yen. This one could turn from a technical standpoint, looking at this potential resistance, aggressive trend lines perhaps, see if the New Zealand Yen holds resistance, but I want to see trend line confirmation first. I know I'm talking fast, but we got a lot to review. New Zealand dollar also making a run to the upside. So again, New Zealand dollar looks pretty similar to New Zealand CAD. This previous high, this daily bar count, do we just get a nice little run back up to this area? Dollar weakness, we'll see. 0.60, 0.61. A couple of good spots for a squeeze and a relief rally against the dollar. Dollar CAD 34.90. Oh, interesting. Making some fresh lows. All right. 3200, 3250. If we get down to this level, I am protecting my profits on my shorts. Anybody that shorted up here, looking pretty good. I have a couple of 3350, 3300 positions also still running. 3200. I'm going to make sure I trap those profits. Dollar Swiss and dollar yen. Dollar Swiss is dropping like a rock, which is fine. This is a hedge for me. I'm still long, euro dollar, pound dollar, New Zealand dollar. I'm short dollar CAD. I'm short dollar yen. Dollar Swiss to me was my hedge. If the dollar gets stronger, dollar Swiss heads up to 102, 103. That's going to be my profit up here. If the dollar gets weaker, that's totally fine. Fall back into support, and I'll buy more dollar Swiss down here, take it back up to a range trade. So if the dollar drops quickly, that's fine. I kind of want the dollar Swiss to drop fast. If it does, great. I'll buy it up, earlier, level myself back in. We'll trade it back towards 98 or 99, maybe even parity at 1.00. Dollar yen, we are creeping towards a couple of these BOJ intervention lows, which is around 145. We breached this low. We possibly breached this 50 EMA. If we can get below this, it's open space to the downside and hopefully follow through. Not just testing the 50, right? We come down to the 50, we bounce. We come down to the 50, we bounce. We come down to the 50, do we bounce again? It's possible. But at the same time, with a 400 plus bar count, that means we've stretched nearly 2 years. Nearly 2 years. 400 trading days on the daily time frame. That's a lot. If we breach this, I'm hoping that there's dollar weakness. I'm that's wishful thinking, but we might just test the level, have a measurement here from the high to low candle on the BOJ, measure the breakout, have another pullback, another breakout. So certainly watching for some corrective moves. Okay, is it enough to come back in and challenge? Challenge the 200 EMA, challenge the low, put in a topping pattern on the dollar yen. It's very possible, but time will tell and confirmation will tell. Okay, Aussie New Zealand short, Carlton. Yeah, we already looked at that. So if you're still short, you're looking for pullbacks to sell, right? You want to see a little bit of a pullback towards maybe this weekly pivot, maybe something like 110. So if we hit 110, look for some resistance, continuing to short down towards 108. I think we can start to look to accumulate some buy positions, but not really until 107 or lower, right? That's my big level here is around 107. I would gladly buy from 107, 106, 105. I'd take this back up towards 110 or higher. But any pullbacks right now, I'm looking to fade this. So weekly pivot, 110 resistance, something like that looks pretty good. A nice visual reference, if I pull up my charts really quickly, take a look. So traders that were with me this last week in some one of the 20 webinars that I did, something really exciting for my trading room, for my flex trading room, is adding my master flex system. So this is a nice way to see the Aussie New Zealand. I want to see a pullback. Okay, Aussie New Zealand right now is all aligned to the downside, so my dashboard is aligned to sell. A couple ways we can trade it. We could enter in right now, and we can build a grid based on a stop loss here. So we can have entry 1, and then take this distance, and you can space out trades. So this would be pullback entry 2, pullback entry 3, pullback entry 4, stop loss above. If we have pullbacks, we catch that resistance, and then we sling it lower, right? If you want to build that position. Otherwise, if you just want to trade the visuals, let's see if price can pull back into my ribbons like it did right here. If we go from green to red, that's what I want to see. From green to red, take that red confirmation. Stop loss can go a little bit tighter towards this U-turn, and then go out to some fresh lows, and look at a nice little reward to risk ratio that gives us a surplus of profits. But yes, I mean, I'm definitely watching Aussie New Zealand for a short and looking to sell that resistance. So either ribbon resistance, or like I said, using this previous fractal high, trade small, and look for sell, and then grid this out for a couple of entries, stop loss above, and go after a total chunk of profit. If we did a 1-to-1 relative to trade 1, but if it's trade 1, trade 2, trade 3, however many trades you're comfortable with, this profit right here will get even bigger. Because if you take entry 1 to a 1-to-1 and you have pullback trades, those obviously are going to be a much bigger reward to risk ratio. Yes, much bigger reward to risk ratio right there. Okay, so I do like that Aussie New Zealand short, yes. Good stuff. Okay, so we did the SPY. We did the dollar, oil, gold, silver. Actually, we didn't do gold, silver. SPY, so it's 932, markets open, 377. Chart alarm set at 390 plus. Chart alarm set at 350. Also looking to see if the Qs move this week. The Qs are still struggling. Chart alarm set at the lows. It's going to be an interesting week. We have we actually have a long strangle going on with a 250. We did a long 250 put, and we did a long 300 call. If either one of these, activate some chart alarms to the upside or downside, we're going to have some nice profit. But we need to see this happen hopefully in the next week or two. Okay. Anything else? Gold and silver. Take a look. This is all dollar related. So with the dollar getting softer, gold's having a nice little rip back above 1680. I'd like to see gold back above 1725. If we get there, look at the dollar. I just think that the dollar correlation is so strong and so obvious that if the dollar gets weaker, gold is probably one of the better trades to the upside. Same thing on silver. If the dollar gets weaker and stays weaker, silver is a great trade to the upside. So we have credit spreads long. We're trading SLV. I'm long the shares. I'm actually fully covered on SLV all the way out to 24. So here is SLV actually trading at 1927. We have some credit spreads at these lows. Okay, so that's it. Looked at some crypto, gold, silver, oil, Brent crude, U.S. oil. This week midterm election CPI data. Watch the 2-year yield. Okay, so very interested in watching these chart alarms on the 2-year yield. Really interested in watching oil, and really interested in watching this inflation number for Thursday. That's not a chart, obviously, but here it is, right here. So 8.2, it's forecasted for 8%. So does it come in as expected with 0.2 to the downside, or do we have a surprise? Again, I say this just kind of as a little bit of a forecast this week. If Thursday's data comes in like 7.9, 7.8, maybe the market gets excited. It comes in like way lower at 7.5. If we have a surprise in CPI, I think, to the chagrin of the Fed, who wants to jawbone the entire global economy down so they don't have to raise rates towards 8 to 10%. They'll max out at 5 and a quarter. The whole world's waiting for this Fed pause, this Fed pivot. It's not going to happen until Q1 of next year, and maybe not even happen for a while. They might peak at 5, pause at 5, and keep it at 5 for the next 6 to 12 months. So what does that mean? I mean, that means that inflation just has to naturally work its way down. There's going to be job losses, there's going to be earnings compression, there's going to be tighter conditions, right? But if we have, I'm just saying this for Q4, if we have a pleasant surprise in CPI, like I said, to the chagrin of the Fed, I think the market rips hard. And maybe it's a little bit of everything. Maybe it's a kitchen sink rally to save the markets for the last couple of months. Doesn't mean it's permanent. Doesn't mean it's sustainable. But we could certainly see a nice little 3-4 week rally. If we get it, great. Holiday trading a lot of time is path of least resistance. So if the market establishes a bullish direction, let's look to go with it. If the market establishes a bearish direction, brace for it and be prepared for it. Okay. All right, traders. Any questions for me? All good? Yes, good. Yeah, do me a favor. That's fine. You have 40, 50 people watching today. Hit that thumbs up button before you go. Just make that a habit, right? Just come on in, click the thumbs up button. It's nice to see everybody. It's a trading week. Let's go, right? Spent all weekend putting stuff together. Got a nice little blister on my hands. Entertainment center. Got a new TV. Put together some stuff. Got the bed all set up. Making this relocation work. Thanks, Gail. Thanks, Brad. Yep, interesting time indeed. Thanks, Donna. Okay, so that will wrap it up for today's Pulver Report. We'll be back on Friday. I will be running the Flex Room Tuesday, Wednesday, Thursday, 8:30 a.m. Eastern Time. We also had our daylight savings, so it's nice to kind of gain that extra hour of the day. But yeah, I just still worked until like midnight last night getting some videos done. So anyway, daylight savings, everything's realigned. Make sure you check your local times, but 9 a.m. Eastern time on Friday for the Pulver Report. Flex Room Tuesday, Wednesday, Thursday, Equities on Demand Monday through Friday. If anybody's out there watching this recording, if you'd like to trade with me live, you can do so. You can come to my YouTube page, youtube.com/Chris Pulver, Mondays and Fridays. You can also subscribe to my newsletter, pulverreport.com. If you'd like to trade with me live for an entire month, you can go into the Trading Rooms tab and check out the Flex Room, check out Equities on Demand. $27 for the first month. Just a trial. Trade with me live. Let's trade some stocks and options, or learn how to trade Forex, learn how to trade stocks and options. I'm pretty comfortable that anybody that comes in, you're going to learn a lot in a month. A lot. Enough so that if you like it, you stick with it, right? So keep trading with me. Either one, whatever your asset class is. But in Forex, at the Flex Trading Room, we look at everything. We look at the SPY, we look at the futures dashboard. We're watching cryptos, lots of chart alarms, trading Forex, running robots. And like I said, I'm moving into next year with the Master Flex, which is really just all about application, finding direction, finding some good visuals, and keeping the trading way more consistent and intentional. Equities on Demand, I think we've weathered the storm really well this year. We've made some nice profits. All things considered, the markets as a whole are down 20+%, and we've done a pretty good job of collecting income still steadily throughout the entire year. Okay, so good stuff, and we'll be back on Friday. Thanks, everybody. See you soon. Bye.